Imagine this: you walk into a mall, swipe your shiny new credit card, and buy that thing you've been eyeing for months. It feels effortless, and no cash leaving your hand, no hesitation, just a beep, a smile, and a promise to pay later. But what if I told you that single swipe is part of one of the most sophisticated wealth extraction systems ever designed? Because the truth is, credit cards aren't really about convenience. They're about control. They're not your financial friend. They're a trillion-dollar machine engineered to keep you trapped in a cycle that quietly drains your wealth while making someone else rich. To understand how the system works, we need to go back to the 1950s when the first credit cards appeared. Back then, the idea sounded revolutionary. Buy now, pay later. Diners Club, American Express, and later Visa and MasterCard promised freedom and flexibility. But what they were really selling was dependence. Once you experience the comfort of deferring payment, you're hooked. It's like financial nicotine, perfectly legal, deeply addictive, and incredibly profitable for those who control the supply. Fast forward to today, US consumers now hold over $1 trillion in credit card debt, more than the GDP of most nations. And here's the part nobody likes to talk about: credit card companies want you in debt. Their systems are designed for it. The entire business model runs on one core ingredient: interest. In 2024, the average credit card interest rate in the US hovered around 25%. And for riskier borrowers, it's even higher. That's like paying a quarter of your purchase price every year just for the privilege of carrying a balance. Most people think card companies make their profits through merchant fees, those tiny percentages charged to stores. But that's only the surface. The real fortune comes from interest, late fees, balance transfers, and over-limit penalties. Every swipe, every delay, every missed payment adds another drop to a river of revenue. But it goes deeper. These companies don't just lend money, they shape behavior. Every minimum payment due reminder, every text alert, every rewards program, it's all behavioral engineering. They've turned debt into a game, a psychological loop designed to make you feel like you're winning points, miles, and cash back, while you're really sinking deeper into obligation. And then there's the minimum payment illusion, one of the most profitable tricks in modern finance. You get your statement, minimum due $50. Sounds manageable, right? But pay only that, and your debt can last decades. That $1,000 laptop might cost you $5,000 by the time the interest finishes compounding. The system doesn't want you to pay it off. It wants you to feed it, slowly, predictably, like a subscription to your own financial decline. Now, maybe you're thinking, that doesn't apply to me. I pay my balance in full every month. And that's great. But here's the twist. Even if you never pay a cent in interest, the system still profits from you. How? Through data. Every swipe, every purchase, every location you visit, it all builds a profile. What you buy, when you buy, what time you travel, where you eat, even what moods trigger spending. That information is worth billions. It's analyzed, packaged, and sold, not just to marketers, but to entire industries built on predicting your next purchase. Credit cards also create something even more dangerous: the illusion of wealth. When you can access thousands of dollars instantly, it feels like you have money, but it's not wealth, it's debt disguised as opportunity. That illusion fuels consumption, keeps economies growing, and pushes people to spend far beyond their means. On paper, it looks great: more spending, more GDP, more growth. But beneath it lies a slow-moving catastrophe, because every borrowed dollar must one day be repaid with interest. During tough times, credit cards become both lifeline and trap. People use them to pay rent, groceries, and bills, but the more they rely on them, the deeper they fall. The average American household carries roughly $7,000 in credit card debt, and for millions, it's far higher. And here's the cruel irony. The same banks that make borrowing so easy will punish you the second you stumble. Miss a payment by a single day, and your interest rate can jump to 30% or more. Fall too far behind, and your debt gets sold to collection agencies, often for pennies on the dollar, who will then chase you relentlessly for the full amount. But this isn't just a personal issue. Credit card debt has become a macroeconomic weapon. When millions of people are locked into revolving debt, their future income is already spoken for. That means less saving, less investing, and less genuine growth. Meanwhile, the corporations behind the cards, the big banks and financial institutions, take those steady interest payments and funnel them into stock buybacks, executive bonuses, and political lobbying. They use the profits of your debt to secure laws that protect their power. In effect, credit cards are a hidden tax on the middle and working class. The rich use credit strategically, leveraging it to build assets. Everyone else uses it to survive. And that's exactly how the system was designed. Because the illusion of financial freedom hides the reality of financial servitude. And just when people start to wake up to that truth, the banks roll out the next shiny distraction: cashback rewards, zero-interest transfers, or travel points. It's the same poison, just poured into a prettier bottle. So as we close this first chapter, remember, credit cards aren't evil by themselves. They're tools, but tools can be turned into traps when used against those who don't understand their design. And this design is not an accident. It's deliberate, refined over decades to turn convenience into dependency and dependency into profit. Every reward point, every exclusive offer, every friendly reminder is part of a larger architecture, one that keeps billions of people in quiet financial servitude. Because the real power of the credit card isn't in the plastic, it's in the psychology behind it. To understand how this system evolved from a clever convenience to a global mechanism of control, we have to step into the next phase, when the rules changed forever. It was the 1980s, an era of deregulation, greed, and innovation. And in that chaos, a single Supreme Court decision would open the door to one of the most profitable legal loopholes in American history. That's when the floodgates opened. What began as a 12% interest product quietly turned into 20%, 25%, even 30%, and no one could stop it. This was the moment when credit cards transformed from a convenience into a weapon. Banks had discovered something revolutionary. Debt was no longer a liability. It was an asset. Every loan, every unpaid balance, every missed bill could now be repackaged, securitized, and sold. Your financial struggle became someone else's investment. Just like the mortgage-backed securities that fueled the 2008 financial crash, credit card debt was bundled into complex instruments called asset-backed securities. Investors would chase them, drawn by the promise of high returns powered by interest payments. So while you were fighting to make that minimum payment, someone on Wall Street was earning dividends from your distress. And this isn't conspiracy, it's the structure of the modern financial system. Even the Federal Reserve's own data confirms that rising credit card delinquencies can benefit parts of the financial sector. Why? Because higher risk justifies higher interest rates and more fees. The banks stay protected, investors get rewarded, and borrowers, the real fuel of the system, are left carrying the burden. It's a perfect trap. Heads, they win. Tails, you lose. Then came the marketing revolution. In the 1990s, a tidal wave of credit card offers flooded mailboxes across America. College students, homemakers, retirees, no one was spared. Banks realized that the easiest way to create a lifelong customer was to get them into debt early. College campuses became recruitment grounds. Booths offered free t-shirts, free pizza, and a free path to adulthood. All you had to do was sign up. What those students didn't realize was that they were signing a long-term financial contract, one many would never truly escape. By the time they graduated, thousands of young adults were already drowning in high-interest debt before earning their first paycheck. But the banks didn't stop there. Once credit cards had saturated the market, they needed new ways to extract value from existing customers. That's when they introduced rewards programs, cashback, miles, points. It sounded like a win-win. Spend money and get something in return. But these programs were a masterclass in behavioral manipulation. They gamified spending, turning financial restraint into a psychological game of earning rewards. Studies have shown that people using rewards cards spend 12 to 18% more on average, and that extra spending creates exactly what the banks want: more balances, more interest, more profit. And here's the kicker. Even the disciplined users, those who pay off their balances each month, still feed the machine because the cost of those free perks doesn't vanish. Merchants are forced to pay higher transaction fees to fund rewards programs. Those higher costs are quietly passed on to every customer, even cash buyers. It's a hidden wealth transfer, buried inside the illusion of convenience. The poor subsidize the perks of the rich. You think you're getting free flights? In reality, you're paying for someone else's illusion of free wealth. Then came the digital transformation. Credit cards didn't just change how we spend, they changed what money means. Every swipe leaves a digital footprint, a trail of data that's immensely valuable, not just to banks, but to advertisers, tech companies, and even governments. They know where you go, what you buy, how often you shop, and what emotions trigger your spending. This isn't just capitalism, it's algorithmic surveillance. The world's largest corporations use your financial behavior to predict and shape your future choices. And that control has evolved. Enter the era of buy now, pay later. Apps and fintech startups promise to be friendlier alternatives to credit cards, appealing to younger audiences who distrust big banks but still crave instant gratification. But beneath the sleek interfaces, it's the same addiction in a new disguise, the same spend now, suffer later model. And because these services often don't appear on credit reports, users are lulled into a false sense of safety until they miss payments. Then the fees arrive, quietly, relentlessly. The system hasn't changed, only the branding has, but perhaps the most dangerous aspect of the credit card ecosystem is how it reshapes human behavior on a mass scale. It rewards consumption over savings. It conditions people to think in monthly payments instead of total costs. It rewires how we measure value itself. Credit cards have turned personal finance into a treadmill, one that keeps you running just fast enough to stay in place. And as long as you keep moving, the system thrives. Because if people suddenly stop spending on credit, the illusion of economic growth would collapse overnight. Governments know this. They depend on it. A debt-fueled population keeps the GDP numbers high and the illusion of prosperity alive. In the US, consumer spending makes up nearly 70% of the economy. That means your debt isn't just personal, it's a national statistic. When you borrow, you're not just financing your life, you're fueling the global economy. And when crisis hits, the pattern repeats. Governments and central banks rush to stabilize the system, not to save the people, but to save the lenders. Bailouts, stimulus checks, interest rate cuts, all designed to keep the machine humming. During the 2008 financial crisis, millions of people lost homes, jobs, and savings. But somehow, the credit card industry bounced back stronger than ever. Why? Because banks learned a critical truth: they were too essential to fail. They could raise rates, tighten lending to the poor, increase late fees, and still report record profits. By 2010, credit card companies were making over $20 billion a year from late fees alone. That's not finance. That's legalized predation. And here's the cruelest twist. The same institutions that trap people in debt are the ones preaching financial education. They sponsor workshops, run money management campaigns, and tell consumers to budget better, all while profiting from the very behavior they encourage. It's like a drug dealer telling you to stay sober as long as you keep buying. This isn't just about poor financial habits. It's about a structure built to monetize human psychology. The system feeds on your emotions, your desire for comfort, status, and security. It knows exactly when to push those buttons. And that's why, even as wages stagnate and living costs soar, credit card balances keep rising. For many, it's no longer a choice. It's survival. By now, you might be wondering, is there a way out? Can anyone truly escape a system that profits from their debt? The truth is complicated. Because credit cards aren't just financial tools anymore, they're woven into the fabric of modern life. To reject them completely means to step outside a system the world has been conditioned to depend on. But awareness is the first act of rebellion. Seeing the trap for what it truly is, understanding how it operates, is the beginning of freedom. Because this isn't just a story about banks or plastic cards. It's a story about power, about how debt became the backbone of modern civilization. Credit cards aren't an isolated invention. They're a mirror of the entire global economy. They exist because we live in a world built on perpetual borrowing. The system needs debt to survive. If borrowing stopped, the illusion of wealth would vanish. Every dollar in existence was born as debt, and each time you swipe your card, you're helping to create more of it. In that sense, the credit card industry is a microcosm of the monetary system itself. Governments borrow from central banks, banks borrow from each other, corporations borrow to inflate stock prices, and individuals borrow to get by. Everyone owes someone, all the way up the pyramid, and the higher the debt climbs, the richer the system becomes. until it doesn't, because one day the ability to take on more debt reaches its limit, and that's when collapse begins, not with an explosion, but with a slow decay. It starts with inflation, with rising interest rates, with the silent erosion of purchasing power. Have you noticed how credit card rates never seem to fall, even when central banks cut rates to zero? That's no accident. Consumer credit is one of the last places where banks can extract consistently high margins, no matter what happens to the broader economy. And as the cost of living rises, people rely even more on credit to survive. The cycle feeds itself. Prices climb, wages stagnate, people borrow, banks profit, the money supply expands, and prices climb again. Every swipe, every tap, every transaction is another heartbeat in that system. And behind all those numbers are real people, families, workers, students, trapped in an invisible web of promises, interest rates, and hope. People who once believed they were managing just fine until one unexpected event hit. A medical bill, a car repair, a job loss, and suddenly that manageable $2,000 balance spirals into $8,000, swollen by interest and hidden fees. When they can't pay, the calls begin. Collectors flood their phones, their credit scores plunge, insurance premiums climb, even job opportunities start disappearing. This isn't just financial pressure, it's psychological warfare. Yet somehow, society normalizes it. We tell people it's their fault. You should have budgeted better. You spent too much. But the truth, the game is rigged long before you even start playing. The average American household now carries nearly $10,000 in credit card debt, and interest payments alone often cost more than their groceries. You're told to be responsible, but the reality is harsher. The system is designed for you to fail, because your failure is their business model. Even the so-called solutions are part of the trap. Debt consolidation loans, balance transfers, credit counseling. They're not escape routes, they're just different cages inside the same financial zoo. As long as your debt exists, you're still part of the machine. But here's what the system never anticipates: awareness. Because when people start to realize that the entire structure of modern finance depends on their willingness to stay indebted, the illusion begins to break. The real leverage isn't money, it's trust. The moment people stop believing in the endless promise of easy credit, the foundation of this trillion-dollar empire starts to crack. This isn't a call to burn your credit cards or run off the grid. It's a call to see clearly, to recognize that what's being sold as financial freedom is often financial servitude in disguise. Think about it. Every glossy ad, every reward offer, every luxury purchase made easy, all designed to make you feel empowered. But true empowerment doesn't come from swiping a piece of plastic. It comes from understanding who profits when you do. Now, let's zoom out. The US economy today runs on over $1 trillion in credit card debt, a figure growing faster than wages or GDP. It's a quiet bubble, not the dramatic kind that bursts overnight like housing in 2008, but a slow, silent bleed, a systematic attack on the middle class, disguised as convenience. And the deeper consumers sink into debt, the more control banks and corporations gain, not just financially, but politically. Because money isn't just power anymore, it's influence. So what happens if this bubble finally bursts? If millions of consumers can't pay or simply stop borrowing? We've already seen a glimpse. During the 2020 pandemic lockdowns, consumer spending crashed, and so did the profits of major credit issuers. That's when the government stepped in with stimulus checks, not just to help households, but to keep the credit system alive. Because if people stop spending, the illusion of prosperity collapses. That's the terrifying truth. The credit system has become so deeply woven into the global economy that it can't fail, not without pulling everything else down with it. It's the ultimate dependency, a system originally designed to empower individuals that has now become the lifeline of corporations and governments alike. But there's still a way forward, not through rebellion, but through awareness and intention. Start by seeing your credit card for what it truly is, a tool of control disguised as convenience. Use it on your terms, not theirs. Pay it off not because the bank demands it, but because doing so is your quiet act of defiance, your way of stepping off the treadmill. And ask yourself, if a trillion-dollar industry survives only because people keep borrowing, what happens when millions decide not to play the game? That's what the system fears most, a financially aware population that understands how money, credit, and control truly operate. Because once you see the architecture of the trap, you can start walking out of it. And the moment enough people do, the system, for all its complexity and power, begins to crumble under the weight of its own deception. So next time you swipe your card, pause for just a second. It's not just a transaction. It's a choice, one that decides who truly controls your future.